And I'd like to take the opportunity to say a few clear words to those policymakers and people in the energy industry who see small, decentralized solutions as a sort of panacea. From their narrow perspective, offshore wind is apparently a bad idea because a big company like E.ON is involved and because wind farms like Amrambank are on an industrial scale. First, distributed generation doubtlessly has the potential to play a leading role in the energy world of the future. E.ON has long been active in this area, especially our energy team headed by Mr. Maubach, and this team really makes also small-scale solutions competitive which are close to the customer. So it's not an either-or issue, it's an and issue. So we have great research projects on smart towns, smart villages. We are currently installing 360 high-efficiency micro-CHP units in northern Germany, for example. We continue to work at pace to develop new businesses in distributed generation. Second, distributed generation alone won't be enough. Only assets like Amrambank West, whose roughly 4,000 hours of full load operation per year nearly make it a baseload facility, can give Germany's energy transformation a solid renewable source foundation. Even the best onshore farms can only achieve half this number of full load hours. That's because it's windy at sea even when it's still on land. Third, wind power is one of the biggest economic stimulus programs that Germany's coastal regions have seen since the end of the shipbuilding industry. Our investments are creating jobs in the harbors from which components are shipped, on the island of Helgoland, where our maintenance center will be, and of course during the construction of the wind farms, exports, cables and onshore connections. In other words, our industrial approach is creating real new industrial jobs. And I think in Germany we all agree that we want to remain an industrialized country. And that doesn't mean that we only have to supply private households with electricity, but also our industry. For millions of Germans, it's an industrial job that feeds their family and not in the service industry. And that's in danger if the sensible and necessary expansion of renewables is done without paying attention to supply security and costs. And this has to be kept in mind, just as the ecological objectives. Our conventional power stations also help ensure supply security across Europe. However, the business environment for these assets has deteriorated in most European markets. The economic situation continues to dampen the demand for power, resulting in markedly narrower margins and lower utilization factors for our power stations. Primarily in our markets in Southern Europe, but also in the Benelux countries and Central Europe, we currently have overcapacities, lower power prices and significantly narrower margins, particularly in power generation. This made it necessary for us to record impairment charges totaling approximately 3 million euros on these businesses in 2011. We are responding by further optimizing our conventional generation portfolio. We are reducing costs, enhancing our assets' ability to be dispatched more flexibly where possible, and looking into temporarily or permanently shutting down facilities where necessary. We are also responding to a dramatically altered market environment in our gas business. I am convinced that climate-friendly natural gas is one of the energy sources of the future, thanks to its broad range of applications. It can fuel power plants, vehicles and condensing boilers, or fuel cells, for instance. In all these areas, natural gas offers clear advantages, combining climate protection with supply security. But right now, the gas market is extremely difficult, even for a company like E.ON, which ranks among the pioneers with the deepest expertise in the industry. Gas has become a global market, which has consequences for all regional markets. The extraction of new unconventional reserves has massively altered the global gas market and, at least for now, is resulting in oversupply and is putting our business under enormous pressure. From an organizational perspective, the separation of our gas supply, gas storage and LNG businesses from our trading business no longer offers any advantages. This is why we are going to combine these businesses, which will enable us to better realize synergy potential by, for example, taking an integrated approach to marketing our assets and contracts and by having a consistent market presence. Ladies and gentlemen, these examples show that E.ON's traditional markets and businesses are entering a consolidation phase. Although we see growth opportunities for renewables in Europe, the main opportunities are elsewhere, outside Europe. We are already very successful in two markets outside Europe, onshore wind in North America and conventional power generation in Russia. That's where we're already very successful. In North America, we're building what is already our 17th wind farm, and our 2.2 gigawatt of installed capacity rank us among the top 5 wind power players in the United States. That's 4 times the capacity of a regular coal-fired power station. And this year we'll add another 0.5 gigawatt of wind capacity in the United States. And in Russia, we commissioned 3 technologically advanced gas-fired generating units with a total capacity of 1.2 gigawatt through year-end 2011, and all of them offer attractive returns on our investment. But we are not just focusing on our existing business areas. We also intend to enter new target markets in fastest-growing regions outside Europe. We want to tap into this growth and by doing so make an important contribution to helping secure our company's future. Regions outside Europe are at a different stage in their economic development, because in these areas we have high rates of growth and we have an enormous appetite for energy. Europe's energy markets, by contrast, are largely mature and thus show little growth. Our intention to forge a strategic partnership with Brazil's MPX represents our first step. Together, we plan to invest in conventional power stations and renewables with a total capacity of roughly 11 gigawatt in order to tap into growth opportunities in South America. We expect our joint venture to be up and running in the first half of 2012. Our deal in Brazil is a good example of our strategy in this important growth area. Instead of making a potentially expensive acquisition of generating capacity, we have opted for rapid organic business development with significant potential for value creation. Instead of taking a risky solo approach, we're working with strong blue-chip local partners. Instead of being active along the entire value chain, we've custom-tailored a package of our core competencies for which there's a clear demand in our target markets. We are currently also conducting concrete, promising talks with partners in Turkey and India about opportunities for cooperation. E.ON 2.0, our efficiency enhancement program, is making good progress. You've read that in mid-January we reached an agreement with 2 trade unions, Verdi and IGBCE, on a collective bargaining contract for the implementation of E.ON 2.0 in Germany. The contract establishes binding mechanisms and a socially responsible framework for the staff reductions that are necessary at E.ON. It lays the groundwork for employees to transition to a job elsewhere and for us to implement E.ON T0 as planned. This will enable us, as planned, to reduce our controllable costs from roughly 11 billion euros in 2011 to not more than 9.5 billion euros annually by 2015 and give us flexibility for our investments in the future, investments in new businesses. I'd like to add that E.ON's business performance is clearly reflected in the Board of Management's compensation, which will be significantly lower than in the prior year and is also below average among DAX 30 companies. And this time we opted for even more transparency. If you read the compensation report and if you look at the remunerations and compensations, you will see the speculations of the media refuted, that we just take whatever we want. Let me say something about the planned transformation of E.ON AG into a European stock corporation, SE. This transformation reflects the increasing internationalization of our workforce, customers and shareholders. all three categories, that is, workforce, customers and shareholders, in all these three categories, more than half are not from Germany, but from other countries. And yesterday, the Supervisory Board decided that the shareholder meeting in March this year will have to take a decision on new articles of association, and this will be put to a vote in May. And we've reached a mutual agreement already with E.ON companies and work councils in Germany and in other European countries on key issues. Over the next 6 months, the details will be negotiated with employee representatives from all European countries. We expect the transformation to take effect so that it is entered into the commercial registers and that that E.ON SE will be fully functional. We expect this at the end of this year. At that time, the first 6 workforce representatives will be added, and the current Supervisory Board will remain responsible until December for designing business policies, and the 6 workforce representatives will remain there. Policy decisions and massive changes in our markets are presenting us with unprecedented challenges. Our clear strategy gives us the answers for our business. We are systematically reorganizing our business in Europe and in fast-growing markets elsewhere, achieving substantial cost reductions and boosting our performance. This fundamental consolidation of all our business areas will create the platform from which our new corporate strategy can deliver its full impact starting in 2013. We know that the companies that remain successful in the new energy world will do more than adapt.